On behalf of Motilal Oswal Securities, I welcome you all to discuss the 4Q FY18 results performance of Manappuram Finance. We have with us Mr. VP Nandkumar, Managing Director and CEO, Mr. Kapil Krishnan, Group CFO, Mr. Raja Vidyanathan, MD, Ashirwad Microfinance, Mr. Jeevan Das Narayan, MD, Manappuram Housing Finance, and Mr. Sindhil Kumar, who heads the vehicle business. I would now request the management team to please share the key highlights of the results, following which we can open the floor for Q&A. Over to you, sir.
Thank you, Nitin. Ladies and gentlemen, welcome to Manappuram's Q4 FY18 conference call. For the quarter ended March 2018, our consolidated AUM stood at rupees 15,765 crores, an increase of 7.6% from the previous quarter and up 15.4% year-on-year. Our consolidated income from operations was rupees 889.8 crores, and the consolidated profit after tax was rupees 182.17 crores, which is an increase of 5% Q-on-Q. For FY18, our consolidated net profit was rupees 670 crores, which was lower than the figure reported in the previous year by 11%. The standalone profit stood at rupees 169.5 crores, and for the Q4, and for the full year it was 700.17 crores. Our gold holdings were 64 tons as at the quarter end. This is up by 2.6% Q-on-Q and 4.8% year-on-year. Our total number of gold customers was 22.5 lakhs. The gold loan book stood at 11,735 crores, which is up 3.6% Q-on-Q and down 5.5% year-on-year. Auctions during the quarter were rupees 89 crores. As you are aware, we follow a policy of making regular auctions on overdue accounts. Our weighted average LTV stood at rupees 1835 crores, or 65% of the current gold price. Interest accrued was only 2.5% of the gold loan AUM. Gold loan disbursements during the quarter were rupees 20,488 crores. The online book accounted for 32% of the total gold loan book compared to 25% in the previous quarter. Ashirwad Microfinance had a closing AUM of rupees 2,437 crores, which is 15.4% increase Q-on-Q and 35.7% year-on-year. For the fourth quarter, the Ashirwad made a net profit of 13.05 crores, compared with a marginal 0.36 crore profit in Q3. The company made a provision of 16.95 crores in Q4. We provided 24 crores more than the minimum amount required by RBI because of our conservative practices. Disbursements were rupees 954 crores during the quarter compared with 688.8 crores in the previous quarter. 100% of disbursements are now made in a non-cash manner directly to customer bank accounts. We had 15.01 lakh customers, 832 branches, 4,168 employees, present in 19 states and union territories. They are the sixth largest NBFC MFI in the country. They have a capital adequacy of 15%. The parent company Manappuram has recently infused a further amount of 100 crores in the subsidiary, which will take the capital adequacy to over 20%. The home loan business had a total book of 374 crores, which is up 9.5% Q-on-Q. Now it operates from 35 branches. The vehicles book stood at 625 crores, which is up 25% Q-on-Q, and they operate from 73 locations. New businesses now account for 25.5% of the consolidated AUM. Consolidated financing cost was rupees 268 crores. Our average cost of borrowing during the quarter increased by 10 basis points to 8.66%. The average cost was down 104 basis points year on year. Employee cost increased marginally by 1.8% to 162 crores. Our consolidated headcount now stood at 24,886. There is a 5.6% decline in administrative costs to rupees 133.24 crore. Depreciation was 18.39 crore for the quarter. Number of gold loan branches was 3,330. Provisions and write-offs for the standalone entity were rupees 24.59 crores. Gross NPA was 0.7%, which is the same as the level in Q3. Loss assets due to theft, police gold, etc. were 20 basis points only. Consolidated net worth stood at 3,836 crores. Book value per share 45.53. Interim dividend of 50 basis has been declared by the board. Capital adequacy 27%, and consolidated borrowings stood at 12,593 crores. I request our promoter and MD, Mr. Nandakumar.
Excuse me, this is the operator here.
Yeah.
Mr. Nandakumar, we can't hear you. Participants, please stay connected while we check the line for Mr. Nandakumar. Thank you. Ladies and gentlemen, thank you for patiently waiting. We have the line for Mr. Nandakumar reconnected. So you may go ahead. Thank you.
So shall we start again?
Yes, sir. You may go ahead.
Okay. Buoyed by the pickup in business in the second half, the company was able to register a consolidated year-on-year AUM growth of over 15%. The quarter-on-quarter growth alone at 7.6%. Likewise, there was good growth in the gold loan book, which at rupees 11,735 crores show a quarter-on-quarter increase of 3.6%. Importantly, the growth in gold loan portfolio seen in Q4 was backed by a 2.6% quarter-on-quarter growth in gold holdings, which now stands at 64 tons. The recovery that we have seen in third and fourth quarters is borne out by the performance of our microfinance subsidiary, Qtr4 Microfinance, which closed the year with an AUM of 2,437 crores. This represents a 15.4% increase quarter-on-quarter and about 36% year-on-year. More importantly, the Qtr4's profitability has improved substantially with a PAT of 13 crores in the fourth quarter compared to only 0.36 crore in the preceding third quarter. Earlier, you will recall that India's microfinance sector has borne the brand of demand, and Qtr4 had reported losses for both the first and second quarters. Accordingly, the full year results show Qtr4 has posted a loss of 32 crore, which has pulled down our consolidated profits. However, a good show in the fourth quarter is a clear evidence that microfinance business has bounced back and is now well positioned to resume the rapid growth. In fact, we expect both microfinance and gold loan to spearhead the growth of the company in the coming quarters. In the other noteworthy developments, our diversification efforts are paying off, as overall growth was ably supported by the robust growth witnessed in the new businesses. In fact, the non-gold portfolio collectively grew by 59% during the fiscal year, and led by the commercial vehicle portfolio, which more than doubled. Put together, non-gold business now contribute 25.5% of our consolidated AUM as against 18.5% last fiscal. Our online gold loan OGL portfolio, which is trust area for us, now accounts for 32% of our total gold loan book compared to 25% in Q3. We continue to pay a lot of attention to the technology side with ongoing investments in digitalization. We also continue to see a decline in our average cost of borrowing, which fell by 104 BPS during the year. It now stands at 8.66%. Our security cost has come down this quarter, and we expect it to go down further in FY19. Along with the good profits, the company has delivered good returns to investors with an ROA of 4.04% and ROE of 17.81%. Thank you. Now the floor is open for questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Viraj Mehta from Qtr4 Securities. Please go ahead.
Yeah. Hello, sir.
Yeah.
Sir, what was congratulations for the performance. Sir, what was your gross NPA in the housing segment last quarter and this quarter?
Yeah. So currently it's 4.7%. Yeah.
And last quarter, sir?
Last quarter was around 3%, 3.5%.
So what has seen this spike in the NPA? Because our disbursements have also not grown that fast. So what has led to the spike in the NPA in the housing segment?
The spike was because the last quarter the growth was also very low. So on a static pool, it has slightly gone up. So now it is improving.
Sure. And sir, on the gold loan, if we look at over last 2-3 years,
Yeah.
Except if I take remove FY17, apart from that, other years our growth has been around 8 to 10, like slightly low, high single digit kind of numbers. What gives you the confidence that the growth will come back this year? Let's say for the first 45 days, if you can just quantify what has been the growth in gold loan.
I will say that, so till 2012, we were growing at a growth percentage at a rate of around 20% more. 2012 have seen so many changes in the regime, in the regulatory regime. The LTV has been brought down, so many confusions, etc. So the gold price has come down. So there was a decline. After that, from 72 tons, it has gone down to even to the level of 50, below 50 tons. Then, 48, to be exact, 48 tons. Then it started growing, etc., etc. So from 2013, from 48 tons, it has reached around 62 tons within up to 2017. So 17, again, the issue has, demon has come. 16. Demon has come, 2016, last quarter of the year, third quarter of the financial year, so the demon has come. So then again, because of the demon, we were not able to disperse money. The customers did not have the money to service the loan or repay the loans, etc., etc. So again, because of that, the gold tonnage has gone down. Now, from the third quarter and fourth quarter, the growth is coming back. That's the only reason. So, otherwise, what I believe is we'll be able to maintain from now onwards in a normal situation. We'll be able to maintain a growth of around 15% plus.
In gold loan?
Yeah, in gold loan. So that is possible. That is possible. So if you are tracking it, history of the 5 years itself, you will see the change. Yeah. So that can be easily demonstrated.
Sure, sir. Yeah. And sir, in terms, if you can just give an update in terms of Ashirwad, where are we in terms of collection, and what is the number for PAR 30, 60, 90 and 120?
Mr. Rajiv Vaidyanathan, MD of Ashirwad, is in the line, so he will be able to.
Yeah, good evening. The collection efficiency is very close to 100% now. We are at 99.6% collection efficiency since disbursements made from April 17. And specifically on the par of more than plus one is 3.1%, and par more than 90 days is about 2.3% now. And what you should remember is that our net, since we have provided completely, our NPA is only 0.2% now, our net NPA. So we start the year clean, and all the baggage has been taken care of in the last year.
Understood. And do you think that once you grow your book from around 2,500 odd crores, at what stage do you think you will see the scale for your cost to income to decline significantly from current levels?
In fact, the coming year itself it will decline. What had happened was, Ashirwad grew only from after Manappuram took over in 2015. And we grew from 245 branches to about 862 branches in the span of 3 years. And in these 3 years, nearly about 12 months have been, because of demon, we had to restrict our disbursements and growth. So as of now, our OPEX is 7.2%, and that drastically will come down to 5.9% next year. And obviously, it will come down further. And even this is one of the best performing in the industry in terms of
Understood. And so when our major exposure, as I understand, and this is pertaining to only Ashirwad, is in Tamil Nadu, and there is going to be an election year in Tamil Nadu next year. Do you see any risk that we have seen with other geographies during their state election? How do you, and I'm sure there are going to be some politicians for sure will make promises which obviously they'll not keep, but that will lead to customer behavior which will be unfriendly towards even microfinance companies. How do you plan to tackle that? Are we spreading some education regarding that? Like, what do we do so that the history doesn't repeat itself for us?
In fact, election next year, Tamil Nadu elections is only general elections and not state elections. Since we have completely, as Kapil said in the beginning, we completely moved to direct bank disbursements, and we have done since August of 17. Election times, the disbursements were usually, the problem because we used to have cash, and many times election, the cash was confiscated even if you have all the papers. So the case in point is Karnataka elections now. Even during the last 2 months, business was very usual, and there was no problem at all in the last 2.5 months in Karnataka also. So that way was insulated from elections on the disbursement side. And collections are always much smaller than disbursements, and so we don't have a problem. On election promises now, I think people know that microfinance is not considered as a write-off or a sector of the farm loan waiver. It doesn't come. And MFIN and Southern have done a lot of awareness in this and said we are not a part of any of this government waiver program. So to that extent, I think it's fairly known. There will be a dip in collection in 1 or 2 months during election times because of the promises, but it is not something which is permanent.
Understood.
So I wish to add one more thing. You see the concentration of in a particular state is coming down. It was around 80% a couple of years back, has come down to around below 30% now. So in 1 year, the chances are it will, in a particular state, the concentration will come down below 20%. So in that way also, we are managing the risk by spreading the portfolio across different geographies.
Understood. Thanks a lot, sir, for answering my questions, and best of luck.
Thank you.
Thank you. The next question is from the line of Viraj Mehta from Equirus Portfolio Management Services. Please go ahead.
I think Viraj is just finished. We can go to the next one.
Sure. Take the next question from the line of Arvind Ahuja, an individual investor. Please go ahead.
Yes. Good evening to the management team. I'm an individual investor. To my analysis, we've been hearing, from Q3 onwards of 2018. But we don't really see traction top line. And if I only restrict myself to the gross NPA, housing finance, 2 quarters back, the management team got changed, but the gross NPA is still climbing. The vehicle finance business also gross, since it is a relatively new book, 2-3 years. So, and even 2.5 seems high, even microfinance 2.5 gross NPA, because it's been nearly 1.5 years now since demonetization. And just to give a context on that, Bandhan has reported gross NPA just about 0.6. So some clarity, because if I look back to 2013-14, what appears is that any new businesses you seed, you scale up very fast, which is commendable, but then suddenly, there is a 2-3 years of unraveling. And you don't report consolidated GNPAs and consolidated numbers where it is not flattering. So so while I'm on it, the last 2-3 quarters, you call for the concall at 5:30. You release the results at 5:20. And, today you made an exchange filing, you will be starting the board meeting at 9:30 in the morning. I think there are certain issues you need to introspect. I'm done.
Yeah, so about the upload, we actually, the board meeting extended and therefore the uploading got delayed. And we usually have been following the practice of having the call on the same day in the evening. So we had continued to that as planned, and therefore we waited a bit, before we started the call, and we fully accept your grievance that there should be some more time gap. I guess because it was full year, so, we got delayed a bit, and we are sorry for that.
Thank you. The next question is from the line of Nischint Chawate from Kotak Securities. Please go ahead.
Hi, 2 questions. One was on the housing side. You have reported GNPAs of 4.8%. So, just curious, what exactly is this? Are these kind of any specific one-offs, or how should one think about it?
Oh, Mr. Jivandas. Good evening. Jivandas here. I represent the Housing Finance. As you all know, we are in the specialized segment of affordable housing, and affordable housing has been under a lot of competitive spirits entering in the last 1 year or so. Last 1 year, in the last 2 years or so. So, in fact, in the affordable segment, many of the players are going through a similar sort of position. But what we have done is, we know that we are facing this stress, but the point is to grow with a firm eye on quality. So while there are some issues in respect of some of these accounts, because basically these are on assessed income and there will be, challenges in collection, but we are not unduly worried because we have to grow, and with that, while keeping a firm eye on the quality of the book. So I can assure you that going forward, we will definitely be able to get over this issue. The sector will also undergo a lot of churn with the type of players. Because just see, in fact, 3 years back, there were just about 64 players. There are now today about 94 players with another 14 licenses with NHB. So while this is not to justify, but just to give you a broad context of what is happening in the sector. So my only, firm conviction is that while we keep a very firm eye on the quality, we will grow the book very, very clean, and at the same time, we'll keep an eye on the existing NPAs. So thereby, with this 2-pronged approach, we'll be able to overcome the problem.
In fact, all these assets are very much on the books of the company. There is also a provision. In fact, we have slightly more provision than what is required to be done. Standard asset provision also is more. So with all this, we should be able to tackle this issue and come to the tipping point in this year.
I wish to add to some more. During the last quarter, our emphasis was not to growth. Our emphasis was the resolution, because there was some stagnation in the portfolio compared to the third quarter and last quarter, between the third quarter and last quarter. But resolutions are happening, and we are hopeful that the NPAs are coming down. Now that with a new team in place, with a new underwriting, the dispersals have started, and it is coming up well.
So, fair. I know you're earning a yield of 14.9, so I think you're pricing it well. But since you don't publish the entire financials, just curious as to what do you think this ratio? Maybe I can't ask it because the size is too small. But what do you think on a normalized ratio? What's the target where this ratio really settle down?
Sure.
Yeah, so I was wondering, where do you think this ratio should settle down over the next 3 quarters?
Yes.
GNPA ratio, right?
Yeah.
I think GNPA in another 1 year will come down to around 2%.
The second question is basically on the liability side.
Yeah.
Of the 52% borrowing from banks, what proportion could be PSU banks?
PSU banks would be around 60%, 60-65%.
60% of the 52 or 60% of the overall funding?
We have got sanctioned lines, and we are in touch with all the banks. So there is, because we are a very safe borrower, there is no issue, and there is no issue that these lines would not be available for us.
Sure. And your incremental borrowing cost would be?
That is 8.8%.
Oh, okay.
10 basis points more.
Thank you very much, and all the best.
Thank you.
Thank you. The next question is from the line of Rajiv Agarwal from Sterling Capital. Please go ahead.
So thanks for the opportunity. So I just wanted to know that since our closing AUM has risen so smartly on the consolidated level, but year on year as well as quarter on quarter, but I don't see the income from operations, in fact, has declined year on year, and it has just risen marginally quarter on quarter. So I just want to know what is the reason for this?
So basically, the new businesses that we have started, we are in the process of stabilizing. As you just heard, the competitive scenario is increasing in most of these businesses. And microfinance will be turning around in FY19. So you can expect a substantial ramp up in FY19 contribution of the microfinance to the bottom line. And housing finance also, we intend to grow the book a little faster, so that should also add to the income.
Okay. And my second question is that with rising yields, our cost of funds will obviously be going. So are we positioned to increase, take loan interest rate increases in our gold loans?
Our major portion is gold loan. And the gold loan being short-term, 3 months loan, whatever is the increase in the cost of borrowing, I hope that can be passed on.
Okay, sir. Thanks for taking my question. Thanks.
Thank you. The next question is from the line of Kunal Shah from Edelweiss. Please go ahead.
Yeah, hi, sir. This is Prakhar. A couple of questions. First, what was the auctions during the quarter?
89 crores.
And similar number last quarter?
Last quarter was also almost similar level, 84 crores.
84 crores. Sir, the gross NPA numbers that we report are on borrower-wise classification?
Yes, in fact, we have been following that for the last 3 years.
Okay. And so lastly, we have given a target of around 1,000 crores of AUM for housing finance over the next couple of years. Given the NPA status that we are seeing, do we see growth of around AUM book of around 1,000 crores over the next couple of years for housing finance, or are we planning to slow that down?
No, now a new team has taken charge in June. First of all, their efforts are to see that the systems, everything is further streamlined, and the resolution of NPA, these are taking place, and I hope the results will be seen in the coming quarters. And with the dispersals also has started taking place. I think in 2 years, reaching a size of 1,000 crores may not be difficult.
And so what will be the capital requirement across these businesses over the next couple of years?
So the housing finance is capitalized by 100 crores. So they will not need more capital. Ashirwad, we have already put in 150 crores extra. So they should need extra capital only somewhere in the end of FY19. And CV is a captive in the standalone entity.
Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Amit Mantri from 2.2 Capital. Please go ahead.
Yeah, sir, can you tell me what was the profits in the housing finance business in FY18?
It ended up in a loss of around 0.8 crore.
Okay. And can you explain your gold loan disbursements when we look at from the numbers of Q1 and Q2? There has been a big jump in Q3 and Q4 both quarters. In fact, this quarter we have done almost, I think, 20,000 crores of disbursals in the gold loan business, and yet the AUM has not increased significantly. So can you explain what is this reason for significant increase in the gold loan disbursements on a quarter-on-quarter basis?
Yeah, we have actually grown in tonnage, etc., which you have said. The first quarter, second quarter, because of the demon issue, the auctions were slightly higher. The portfolio, there was stress, there was some negative growth. So with the second quarter, that demon challenges are over. After that, it started growing at a normal level. That's the reason for growth and dispersal. So now the growth is coming in the AUM also.
No, so I think if the numbers we look at it, what it implies is that the gold loan repayments or the tenure of the gold loans has been decreasing over the last few quarters, because the disbursements and the AUM growth has not kept pace basically in Q3 and Q4. So has the tenure of gold loans that we are given been decreasing over the last few quarters?
The dispersals, because with the online growth, with the online gold loan, the churn is going again closing, and second dispersal, third dispersals are also increasing.
Okay, so churn is increasing in the gold loan basically portfolio. Okay, got it. Thank you very much, sir.
Okay.
Thank you. The next question is from the line of Manish Otswal from Nirmal Bang. Please go ahead.
My question on the our overall performance in FY18.
Excuse me, this is the operator. Mr. Oswal, may we request you to use a handset, please? Your voice is not clear.
Yeah, in FY18, which is around 15.4%, whereas if I look at the consolidated net interest income growth is 8% only, and other operating expenses like employee expenses, other operating expenses are growing with a rapid pace of 22% and 30%. So, I mean, one is why the operating performance, especially the operating revenue progression in the year is so weak, and secondly, despite of the very high expenses growth. So, how do you see these things to correct in FY19 and 20?
No, sorry, actually, we missed the initial part of your question because of the disturbance on the. Could you just summarize it shortly? Yeah.
Yeah, my question is, sir, I was looking the AUM growth for FY18, the growth is 15.4%. When I look at the net interest income growth, which is 8%, so obviously our NI growth is lower than the AUM growth. And second is the operating expenses growth is very strong at 22%, 30%, employee expense and other operating expenses. So how do you see these things to change in FY19 and 20, whether the core profitability will improve meaningfully or there will be a minor improvement?
See, basically, while the closing AUM has grown by 15%, the average, you have to see, average grew by 4.7%.
Okay.
So that is the reason why the revenue will be linked to the average growth.
And what about, sir, operating expenses growth this year?
So operating expenses this year should come down because, as you know, the security guards that we have been spending a substantial amount on, we are looking at various technology solutions for that. And we expect the security guard cost to come down, and with that, the overall admin expenses should also come down this year.
And lastly, do we have any credit cost guidance in our gold loan business, microfinance, and the housing finance business?
See, gold loan, there is no question of credit loss. It has
credit cost guidance, like this year we have provided NPA for that, the gold loan NPAs.
So, gold loan with any major increase, and even in all the other businesses, as we had said, expect NPAs to come down only. But have any specific number guidances.
Okay, and tax rate remain the same, sir?
Yes.
Thank you.
Thank you. We take the next question from the line of Samir Dalal from Natwar Lal and Sons Stockbrokers. Please go ahead.
Yeah, 3 questions. You talked about gold loan being able to grow going forward, and, you struggle to grow because of a lot of issues, whether it was demon, whether it was LTV being reduced, whether it was whatever. Now, my question is, what is the actual addressable market that is there for gold loan companies, which is still with the unorganized sector? And is there any way of shifting that, or are the LTVs just too large for that, and that will never shift at all going forward?
The unorganized sector is still very large, I admit that. And what is happening, the opportunities for gold loan NBFCs is mainly the shift from them. As far as the unorganized sector, their problem is their inability to raise money from the market, whereas NBFCs have. And the NBFCs also have the reach, and also with the technology like online gold loan, etc., digital gold loan, etc., so much of innovation, and also at a lower cost, will be able to attract customers from the unorganized sector. So it's still a great opportunity.
Is there any way you can address what percentage of the market is still there in the unorganized space?
The unorganized sector, there is no data, but the general impression is it must be at least 2-3 times that of the organized sector, including banks.
Okay. Now, I'll come back to that question later, but the second question is other loans, which has grown quite significantly.
Sorry?
From other loans.
Yeah.
It's grown from 120 crores to 592 crores. Now, that's quite a significant jump. What contributes to this others, and what is been the growth in that, and how do you expect that others to grow now?
So basically, this is some loans we give to other NBFCs, and there we are getting a yield of around 14%. And there is absolutely no delinquency. These are low rated, but they are all rated corporates. And basically these are companies that are due diligenced by IFMR. So IFMR, as you probably know, they go beyond what the rating agencies also do. They do a lot of field level study, and based on that we also have our own criteria. They're typically companies which have some external private equity investment so that we can be assured of the corporate governance, and with good auditors, good promoter, and a professional promoter. So these are kind of companies we prefer. So that's the
how do you see that book growing, or do you intend on growing it? Because at the end of the day, that's like a wholesale kind of lending business that you all are doing. Now that is not your core focus. Your core focus was eventually to do the smaller tickets, smaller size loans. So if you can just guide us on what you want to do with this book going forward.
Yeah, see, basically our core focus does not change. But as you know, our capital adequacy is very high right now. So we are pushing on all fronts. We will obviously prefer our core business growth, which is the gold loan, and as you know, we are putting thrust on home finance, Ashirwad, and vehicles business. So this is more like a treasury operation. It's not a core focus, but since our capital adequacy is so high and we have the space for this, and if you see, most other NBFCs also do this.
Okay. And the last question, I mean, if you can, you said you put in 100 crores into Ashirwad Microfinance to increase the capital adequacy to 20%. How will that change your stake in the company? From where to where will it reach?
We are already around 95%.
You are now at 95% after the 100 crores, right?
Yes.
Okay. And the residual 5% is with the erstwhile promoter of the company. Is that correct?
Yes, Mr. Rajavardhana.
Any plans of maybe listing that one, or what is the future plan? Are you going to merge it into your parent company? What is the plan with Ashirwad? Are you going to run them as two separate companies continually? What?
Basically, merger will not happen because they have a separate status under the RBI as well. This year they are going to be profitable, so a lot of their capital adequacy requirements can be met by that as well. And the board will deliberate somewhere during the end of the year. The company will need extra capital on what would be the best way forward. So Manappuram can put, they can go for IPO, we can take private equity. This is a decision that the board will deliberate at that time and take a decision on.
Okay, and if you can allow me to squeeze last one question in. Your borrowing cost is now at 8.8, which is extremely competitive, and interest rates are rising. How do you foresee your borrowing costs going forward? Where do you see it stabilizing? What would be the fair number to assume as your borrowing cost for FY19 probably?
See, we are a low risk borrower from the bank's point of view and even in the NCD market. So we have all options open in front of us. We have got a large customer base, so in case we ever decide to do a public issue of NCD, that will be also comfortably subscribed, which we were doing in the past. And as of now, we really, no one knows where interest rates are headed. We are very comfortable on the ALM. We have got enough undrawn bank lines and further sanctions in place. So as of now, we are absolutely in a comfortable position and don't see any major issue.
So would you say 8.8 could be your borrowing cost for FY19 as well then? Or?
Yeah, it should be below 9. That's our current budgeting.
Okay, perfect. Thank you very much, Kapil.
Thank you.
And Mr. Nankumar.
Thank you. The next question is from the line of Senthil Naran from Crest Wealth. Please go ahead.
Sir, thank you for the opportunity. What is the operating expenses you are expecting for FY19, sir? How much it will come down? Or will you be maintaining the same kind of number?
See, we think that the overall OPEX will remain at around 7% OPEX to AUM.
Okay. And employee expenses, sir?
Employee expenses also will remain under control this year. See, last year, you probably may have noted, there was increase in the minimum wages in many states, and even bonus was made payable on this higher minimum wage. So that was also one factor why the salary cost went up in FY18. So going forward, we don't expect it to go up so much.
Okay, thank you.
Thank you. The next question is from the line of Ankit Chaudhary from Equirus. Please go ahead.
Hello. Yeah, thank you for the opportunity, sir. So what was the average yield during the quarter on the console basis?
The console yield is a mixture of many products. So that will give you a very unfair kind of it's not fair to look at that.
Okay. So I can get the product wise?
Yeah, we have all that data. So basically gold loan yield is around 24%. And commercial vehicle is around 18-19%. Home loan we have already disclosed. Ashirwad is around 22%.
Okay. And so what percentage of the borrowing will be getting repriced in FY19?
So around 1,000 crores of NCD is what will be coming up. And we also have bank loans and commercial paper, which are anyway short term.
Okay. So this NCD is 1,000 crores. What is the interest rate right now? And what would be the incremental interest rate?
Yeah, so right now the cost is over 11% because, these are old NCDs. And even if we issue today, depending the market is changing so rapidly every day. So it will be definitely in the range of 9.5 to 10, we think. So there will be a saving in that.
Okay, great. And in the vehicle finance, so currently, which segment are we focusing on? Commercial vehicles or passenger vehicles or cars?
We are mainly in commercial vehicle. 90% of that is used commercial vehicles.
Okay.
Yeah. So that's
in commercial, I mean, is it LCVs or MHCVs or a combination of both?
Mixture of LCV, HCV and MCV.
Okay. So any plans of diversifying in other segments? Tractors or cars, two-wheelers?
We have taken some steps because, two-wheeler is one product which can be very easily cross-sold to our gold loan customer base. So we have already started a small business in two-wheelers, which we want to grow. There's a very good cross-sell opportunity there.
So have you started two-wheelers across pan-India or is it few states?
Gradually, yeah. Not yet pan-India.
Okay.
Oh, gradually.
Okay. Thank you so much.
Thank you. The next question is from the line of Abhishek J. from VD Capital Markets. Please go ahead.
Hi, sir. Congratulations on your good results. And thank you for the opportunity to ask this question. So, sir, my question is, what is the console numbers on our GNPA and NPA?
See, the GNPA has to be seen product-wise, right?
Right.
If you look at it on a console basis, it will give you a mixture of all kind of figures.
All right.
Yeah. So if you want product-wise, we've discussed some of them. I can give you some more details there.
Sure.
The GNPA on gold loan is 0.6. Commercial vehicle is 2.7. Housing finance is 4.8. Ashirwad is 2.3.
All right, sir. And sir, one more thing. What is the average tenure of our micro loans and gold loans?
Gold loan average tenure is 2 months. And what in microfinance we give around 18 to 24 month loans.
All right. Okay. So, sir, when the tenure for a gold loan or micro loan reduces, how does it impact the asset quality?
So, gold loan asset quality goes up because, the margin of safety increases.
All right.
Right? And in micro loan, basically, shorter the tenure, the better, but it's also linked to the customer's income and his ability to pay and the competitive scenario.
Okay.
So, yeah.
And so, one more thing. What is the periodicity of your gold auctions?
Gold auctions are held all the time. There is no fixed tenure, so maybe every week also there could be an auction happening. It happens in every region. It's not centralized, so different regions will keep having it all the time.
Okay. So basically, in your gold loan segment, your GNPs and NPs provisions are offset by auctions, right?
Yes, as I mentioned on my call also, we do regular auctions. We have always been doing that and following that practice consistently. We don't try to time the market based on gold price. Okay. To wait for auction.
All right. Okay. Thank you, sir. Thanks a lot.
Thank you. We take the next question from the line of Pawan Gangwani, an individual investor. Please go ahead.
Hi, this is Pawan Gangwani. Actually, I would request your specific commentary on your housing finance sector. Like, how do you foresee in the coming year and in the coming years, specific to that sector?
Mr. Joseph? Yes, good evening, Mr. Gangwani. Actually, as you know, the Housing for All scheme launched by the government under the Prime Minister's Awas Yojana has actually boosted a lot of competition, as also a lot of housing supply in the sector. So affordable housing is a very much happening segment, and there are many players looking at it. Now, in this also, in fact, recently there were press reports that the government has preponed the execution of the PMAY Gram and PMAY Urban also. From earlier it was supposed to be done by 2020, but then now March 19 is the deadline given for the Gram part of it. Now with talk of affordable housing under PMAY increasing, and also a number of organized players coming into the sector who are actually, regulated by RERA, a lot of good players will come in, the supply side will increase, and also the lending opportunities will increase manifold. So we are actually concentrating not in big cities, but in, the peripheries of big cities, as also in Tier B and Tier 3 centers. So here, not only self-construction, but when the organized players come in and the supply increases, the demand also will increase. And this is where we see great opportunities coming in. So it is a play which will happen, which has started happening. Again, there will be turn in the sector. And this is a 4 to 5 year play. So we have to see that while the growth opportunities are there, we also have to see that the underwriting practices, how best we tackle the soft buckets in terms of delinquencies, all that is critical. And that is where we have already set in motion a very good technology platform. This is the investment phase for the company. And going forward, we will definitely have top line growth and also a control on the delinquency of the portfolio.
Okay, that answers my question. Thank you so much.
Thank you. The next question is from the line of Aditya Kiran from L&T Mutual Fund. Please go ahead.
Can you please give us a number of the total amount of gold that would have been auctioned in the full of financial year 18, and how much was the number in the financial year 17? And also, normally, how much is the recovery rate if you were to auction any gold in terms of the amount that can be recovered in the auction process? Thanks.
Yeah, so we get almost 90% of the amount when we auction, and the total auction in the tonnage in FY17 is 4.5 tons, and it's a similar figure in FY18 as well.
So in absolute amount terms, it would be good to assume like almost 1,300 to 1,500 crore of auction that happens every year?
So in FY17, it was 929 crores and 900 crore in FY18.
Okay. Yeah, thank you.
Thank you. The next question is from the line of Suhani Doshi from Edelweiss. Please go ahead.
Yeah, hello sir. I missed it. So can you give me what kind of growth do you see in the gold business for the next year?
Yeah, our expectation, we have already mentioned that, and we told it is around 10 to 15% growth is expected.
10 to 15% growth?
Yeah.
Okay, yeah. Thank you.
Thank you. The next question is from the line of Vipul Shah from Ripple Wave. Please go ahead.
Hello.
Yes.
I just wanted to ask for Ashirvad, is there any net interest margin guidance for the next year which the management can give?
See, the net interest margin is regulated in Ashirvad Microfinance, which is 10%. We cannot get more than 10% net interest margin.
And you mentioned, I believe earlier in the call that all the legacy portfolio has been fully provided.
Yeah. Yes.
So on the incremental loan book, is there any credit cost guidance which management can provide?
No, we are going to do a standard provision of 1%, which is there prior to demon. So that will take care of our usual losses. So
you don't foresee any surprises there?
No. Because the current portfolio has less than 3 to 4% of the pre-demon portfolio. So we are already over that.
Oh.
So can we just have the last two questions?
Sure, sir. The next question is from the line of Suresh Korada, an individual investor. Please go ahead.
Yeah. Thank you, sir. Sir, 3 years back, we have seen that gold prices have fallen to $1,000 per ounce. So this year with interest rates rising in the U.S. and strong dollar, if gold prices were to fall up to $1,000, so what impact do you see on the credit cost and gross NPAs?
See, there were instances of gold prices going down in the past also. Still, we could report a reasonable ROE. Now, the situation has improved during the last 1.5 years because the tenure of the loan has been reduced to 3 months. And also the interest collection has improved. Now the receivables where the interest has not received outstanding is around 2.5% only. So the LTV, as we have mentioned earlier, is around 30%. So the gold price coming down from $1,300 or $1,280 to $1,000 may not be sudden. It will be gradual. So on a daily basis, we are correcting the LTV. So even if it is coming down, it may be over a period. By that time, the portfolio also churns very fast because of the short-term nature. I don't expect much loss on account of that. Maybe a small portion of the interest receivable may not be very minor portion. But there could be, in such a situation, the problem is there could be a shrinkage on the year. Because with the fast churn, when the loans are rewritten, it will be at a lower amount. So that is the challenge.
Okay. Thank you, sir. So today we collect 90% of when we do auctions, right? So that covers both the principal plus interest or interest part?
Yeah, we collect more than 90%. Then see, our LTV is around 70%. The receivables which can go maximum to 6 months, maybe around 12%. With that, the chances of loss are very, very low.
Okay. So one more question. With regard to this NPS, we auction very quickly, whereas our competitor doesn't auction at all. So, for example, our gold loan GNPA is around 0.6%. The competitors is around 7% of the gold loan portfolio. So the competitor says that if we auction quickly, then the customer may not come back. So that is why we don't prefer to auction. We give more time to the customer so that he is able to somehow arrange funds and pay back. But if we auction quickly, then we lose the customer forever. So I just wanted to understand your rationale for auctioning quickly rather than giving customer more time.
Sir, the proof of pudding is in eating, no? So see the quarter-on-quarter collateral growth, and you can compare with the market. Ours is not lower than the market. I think we are ahead of the market.
Okay. Yeah, thanks.
Thank you. We can take that as the last question and close the call now.
So we have one question in the queue.
Last question, yeah.
Sure. Ladies and gentlemen, due to time constraints, we take the last question. The last question is from the line of Amit Mantri from 2.2 Capital. Please go ahead.
Yes, so your website has a new gold loan product where you're giving gold loans for 9.9%.
Yeah.
Can you elaborate more on that? What kind of product is this? What target the target customer here?
Yeah, it is an online gold loan product. Where the customer transacts at certain interval, like an overdraft. If a customer transacts. So this is intended to large ticket customers over 50 lakhs. We have few customers. We want to give them a special facility.
This is above 50 lakhs, is it?
That's right.
Okay, thanks.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Nitin Agarwal for closing comments.
Yeah, hi. On behalf of Motilal Oswal Securities, I would like to thank the management team for taking out time and sharing with us the insights on the company's performance. We also thank all the participants who joined us on the call. Thank you so much.
Thank you.
Thank you.
Thank you. Thank you. Thank you.
Thank you very much, sir.